Hey everybody, Chuck Barone here on Wednesday, September the 20th, 2023. It's officially Powell Day. That's right, the Federal Reserve coming out today with their interest rate decision, those wimps, and the market's reacting accordingly. But before I get into a whole bunch of commentary, as always, let me welcome everybody to the show. Thank you guys for your support. You guys showing up and watching these videos every day keeps us making them. We really appreciate you guys. Spread the word, man. Tell your friends about the show. It's a simple show, but you're going to get the truth here without all the razzle-dazzle doom speak. And we appreciate your guys' support. Okay, so let's talk about these markets today. Now, today is going to be a strange day because I'm recording this video, and it is right now 12:43, so the markets are not even closed yet. But I have a funeral I have to go to today, and it's forcing me to get out of the office a little bit early, so we're doing this show a little bit early so I can comment on our friends at the Federal Reserve today. As we know, today was the day. I haven't had a chance to really go through Powell's presser, the notes to it. I did not get a chance to see it. So we'll have a lot of talk about that tomorrow. But the Fed today deciding to hold rates steady, not raising rates. So the Fed funds rate still sitting at 5.35%. Markets reacting. I guess what the Fed did, some of the comments, the Fed, in part of their data they released, that they were showing one more rate increase this year with 4 rate cuts coming next year. Well, now they're down to 2 rate cuts coming next year. I'm telling you guys, before it's over, there's going to be no rate cuts coming next year. Because this inflation boogeyman is not just going to go away without a fight, man. It just is not going to happen. So anyway, the market's reacting today down. The Dow falling 30 points. As last time now this is not a close, so this is the last time I saw the markets. Dow was down 30, sitting at 34,486. S&P, the broader market, was down 33, sitting at 4,410. The tech-heavy NASDAQ down 169 points, 13,509. So the market's not having a super negative reaction to Powell, but not having in any way a positive reaction. I think the next couple of days, what we see with data, and as they release more information from this Fed meeting, that's where we'll see the market reaction. The bond market today selling off a little bit. So you have weird day, right? You have the 10-year actually falling 1 basis point to 4.35%. But you have the 2-year up 4 basis points to 5.15%. Now we're spreading it out again, right? Up to 80 basis points in the inversion. And the bond market not reacting well. So we'll see where this goes. A weird day, man. A very weird day. The dollar today up very small. Promise of higher rates going to keep the dollar strong. 105.26 on the index. Not much really, but a strong dollar. Metals today rallying, even in spite of a strong dollar, with gold up $5.70, sitting at $1,936.60. Silver up just 17 cents. Sitting at $23.35, so good prices for metals right now, especially in the face of this dollar. And as I've told you guys before, I really believe once the dollar starts to come back down, metals, gold and silver are going to take off. Oil today taking a little bit of a break. It's been on a streak, man, really ripping higher, but today coming down 93 cents per barrel, sitting at $90.27 for a barrel of West Texas Intermediate. So oil still holding strong. Of course, that putting a big wrench in the gears of the Federal Reserve and their plans on, not of trying to engineer this incredible soft landing scenario. Oil, the big boogaboo on all this, falling a little bit today. Bitcoin today also coming down a little bit, down $271, sitting at 26,903 last I saw. So Bitcoin still a good strong number. In spite of all the negative today I was reading their, now the SEC suing Bankman-Fraud's parents. Apparently they were in on the scam, taking millions of dollars and kind of stashing it away. So we'll see how all that turns out. It's going to, all this legal stuff, man. Everybody thinking they can just do whatever they want and get away with it. Well, it looks like the wheels of justice turning slowly, but at least they're still turning, right? All right, so let's talk about Powell today. Powell and the Federal Reserve, lily-livered, wimp, cowardly punt today. They punt on a rate increase. The Fed, in my estimation, totally wimped out today. They wimped out by holding rates steady, no increase. If you look at all the factors the Fed is looking at, inflation rising, we went from 3% in June to 3.2 in July to 3.7 in August, with oil on a tear this month, with gas just ramping up. We can and PPI not coming in so great this month either. We can anticipate probably a higher top line number on inflation next month, right? You got the economy and consumers still chugging right along. Consumers spending money, borrowing record amounts of money to continue spending. The economy is still moving along, unless you're in real estate or commercial real estate. Retail seems to be going strong. Amazon just announcing they're hiring 5,500 new jobs just here in Las Vegas for the holiday season. So you got the strong economy. You got consumers still spending like crazy. Inflation going up. Now you have oil and gasoline prices spiking. And we all know what that does. That affects the entire economy negatively and makes prices on everything go up. And especially in the world we're living in now, where companies use any kind of excuse they can to raise prices, whether they really need to or not. Raising prices is good for the bottom line, a lot of these companies, especially when their costs aren't really going up much. So we know that that's going to affect inflation negatively. You still have a super hot jobs market. Expected to come in tomorrow around 225,000 first-time claims, way below the 285 they need, right? Now you see that the job market basically defying the Federal Reserve. The Fed sees hot jobs as a big driver of wage gains, and they see wage gains as a big driver of higher inflation numbers. People have more money to spend, they tend to spend it, right? Especially with, what did we say yesterday, the savings rate now 2%. So people saving 2 cents out of every dollar. Pretty pitiful, man, okay? So you have higher hot jobs market, wages on the increase. You got union activity now going to drive wages higher. The Fed's big fear, obviously, that wages are going to push inflation higher. So today, strictly a wimp move, man. Straight up sissy. I can think of a lot of profane words to use for what they did today. But basically, they just stuck their head in the sand and decided that, well, let's just wait and see. We want to digest more of the data, and we want to check out and see how the effects of the rate increases we've already made are affecting the economy, and beep, 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 beep. Bullshit. Okay? You don't need to be Nostradamus to see the stuff that we're seeing, man. So they know. The Fed knows they're going to raise rates again this year. They've been pretty much telegraphing that. So they're going to have their chance in November. But my question would be, why wait? What do they gain by waiting? They're hoping maybe, please, we won't have to raise rates later. Really, was that they're hoping? I'm telling you, man. Maybe their friends in the banking business made a few calls and were like, hey, man, these higher rates are friggin' killing us. We actually have to pay people interest on the money they put in the bank, man. We can't have that, right? Or maybe some of their friends in government calling, going, hey, man, these higher rates are killing the government because every bond we have to sell, now we have to sell it pretty much twice the rate it was last time we sold these bonds. The biggest losers in higher rates, okay, is the government and banks. They suffer the hardest with high rates because they benefit the most from low rates. Consumers are just in third place in that one because higher rates are terrible for everybody. Just not terrible for keeping the dollar strong and the economy moving at a rate that's sustainable, right? So we know what's happening to the Treasury. Banks taking it in the shorts. And we're listening to Powell today. A couple of quotes. I love this stuff. He said, given how far we've come, we're in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks, quote unquote. Now, what a mealy-mouthed bunch of bullshit that is, man. What in the hell does that even mean? Given how far we've come. Okay, top-line inflation is about twice their target. They're in a position to proceed carefully. That suggests that they haven't proceeded carefully so far, right? Were they in or where have they been in this position all along, right? And as we assess the incoming data, well, you guys need to take a closer look at that data because the data I'm seeing kind of is not very much good news for the Federal Reserve in their inflation fight. And then, of course, the evolving outlook of things and risks. The risk is everywhere, man. We just talked about half a dozen things that are going to be affected. Powell also said, this is another great quote, he said, economic activity is obviously stronger than we expected. Well, they thought they were going to knock the economy into a recession already. We've told you guys, I tell you again, the Fed raising interest rates does nothing to lower inflation. It doesn't. What it does is typically brings on a slowdown in the economy because people have to borrow money and that's how the economy functions. Higher rates slow people down, although not in this particular cycle. That slows down the economy. That then stops prices from rising initially and brings prices down eventually. Well, when does that start? Now the Fed is, we've always understood on this show, if you've been paying attention, that this recession is what the Fed has to engineer to bring inflation rates down to 2%. It's going to be almost impossible to get rates down that low without a recession, without people losing jobs, man. It's just the way the economy works, right? So now they're talking about this soft landing, so this whole idea that the Fed can do this amazing, infallible job and, engineer bringing inflation from a peak of 9 down to 2% without the economy tipping into recession, without job losses. I gotta say, I got my doubts, kids. It's just bullshit. That is never, ever, ever going to happen. I've been telling you guys, the last time the U.S. had inflation like this, it took them nearly a decade to extinguish it. Now, they learned a lot from that experience about declaring victory too quickly, about moving to cut rates too quickly. And it's going to come down to that ultimately. The same decision they had to make in the 70s is going to come down to that same decision for the Fed now in this cycle. Which do you want to do? Do you want to follow your mandate and keep inflation at 2% or less, maintain a strong dollar, price stability? Or do you want to pivot and save the economy from or get the economy out of recession? And that choice is coming. Now, the Fed, in the past, in the 70s, they opted to protect their economy. And every time they turned the cycle back to cutting, inflation just went bananas. And it turned out to be so bad, they actually had to raise the Fed funds rate above 20% and keep it there. to get this in the recession because they kept trying to turn the cycle sooner than they should have. They ended up with way worse recession than they needed to. And that's the genius of government. So it looks like we're on the same path. A strong Fed, a confident Fed today would have raised rates a quarter. A quarter really would have been more psychological than do real damage to the Fed and to the economy. The Fed once said their terminal rate would be roughly 5.6. Isn't it amazing that where they've positioned themselves, a quarter point increase gets them at 5.6 exactly. So I think we're going to get there. Obviously, today's not the day, and I was wrong. I really believe the Fed would have the guts to raise rates today. This leads me to believe that when it comes time to make that choice, strong dollar, low inflation versus save the economy, the Fed's going to wimp out, and they're going to save the economy and cut rates sooner than they should. And this inflation thing is going to just keep on ripping, man. But anyway, guys, that's it for the day. I got to get out of this office and get to doing some other stuff. We appreciate your support, as always, guys. If you like what you're hearing, please hit the like button. It changes the algorithms around, gets our show out to some more viewers. We pick up some views that way. Always, as always, hit me up with your questions and your comments. We'll be back tomorrow. Obviously, we'll have a lot more information on Powell. We'll go through all of that. A lot of data coming tomorrow. It's going to be a huge day. We'll be here to give you guys the news you need. Until then, my friends, take care. Thanks.